Hello, everybody. Hello. Welcome to the Palantir Q4 2022 earnings live stream. I just saw the number. I cannot believe there are 431 people here at 4:31 p.m. There are 431 people here at 4:31 p.m. I have to take a picture of this real quick. Oh, man, I just went to 420. Oh, but that's okay. You know what else reminds me of 420? Getting high. And if you looked at Palantir's stock price after hours, well, it's not that low. We're at 9. Holy crap, we're at 9. Oh my goodness. Last time I saw this, it was 850. So 9 actually is a surprise for me. This is amazing. You know what? Before we get into it, first of all, thank you all for being here. I really appreciate you all. It means a lot to me. We're going to enjoy the next hour and a half. We're going to be talking, discussing, getting through this entire earnings call. This is what happens when you're a long-term investor. This is what happens. You get to share in the upside of a company doing well. Not every quarter will be great. Not every year will be great. But if you give them time, you believe in your thesis, you keep going with the narrative, the arguments for why you invested in the first place, you get to enjoy in the upside. I know some of our averages are still high. I know some of us are still, we got to get to 15 to break even. But goodness, you look at what they were able to do and you realize, they might actually get there and exceed $15, $16, $25 profoundly in a major way. Now, will that happen? I don't know. We are going to see. But this is what it means to be a long-term investor. It means to have your conviction set on something and you get to enjoy in the upside. Even if you're not breaking even yet, you get to enjoy the ride up to the mountaintop, which we hopefully will see Palantir being able to get there. That's why it's fun to invest in a company and actually follow it for the long term. Okay, biggest news before we get into it. Palantir has reported its first quarter of positive GAAP net income. I cannot explain how important this is. Why is this important? Palantir is not profitable. What's the thing you hear? 20 years, not profitable company. They can't make a profit. They just reported their first quarter of positive GAAP net income, generally accepted accounting principles, net income of on a GAAP basis being of 0.01 cents. That means they made 0.01 cents of earnings per share in profitability, not adjusted operating profitability, GAAP profitability margins. Now, the next thing that was the biggest news of this earnings call is that they expect to be GAAP profitable in 2023. Palantir in their earnings call, in this full year 2023, we expect, let me just share my screen right here so you guys can see it. And then we'll get into it even deeper. I haven't even rang the bell yet. I got to ring the bell. For full year 2023, we expect revenue of between 2,180 billion and 2.23 billion, adjusted income from operations of 481 to 531 million, and GAAP net income. That means profitability. Now, if you go 2 earnings calls ago, Palantir said 2025, we're not going to be profitable till 2025. And I made a video the day after that saying, look, I love Palantir, but that's a long time. That's like 2 more years you're going to make us. So they went public in 2020. You're going to make us wait 5 years for you to show a profit. It just didn't make sense. Even the way Alex Karp said it, he was like, we won't be profitable till 2025. And it was just like, this doesn't feel right. SoFi went public in 2021. They're going to be profitable by the end of this year. I would imagine Palantir have the same type of trajectory. I even talked about it today on the morning stream. And lo and behold, this was the biggest news of this earnings call, GAAP net income this year, 2023. Now, here's the question. This is revenue growth of 20%. If they get to 2.23 billion, are they sandbagging that? Because if you sandbagged profitability and you're beating it by 2 years, are you sandbagging revenue growth? That is going to be a very important question as we dive into this conversation even deeper. Dude, that is 70% revenue growth in 2020, in Q1 2020, and only 20% year over year 2023. Yeah, so I agree, Palantrillion. My question is, are they sandbagging it? And we'll see. Maybe they are, maybe they aren't. If they aren't, that's not the greatest growth in the world. I would just, I tend to think, well, if they're beating profitability by 2 years and they're putting up net income of EPS when no one expected that. I mean, they beat analyst expectations by 33% for net income. I mean, that's insane, right? Could they beat revenue? That's going to be the question. Could they beat revenue? Okay, you guys are asking to ring the bell. Let me pull up Webull. Let me just pull it up on Google. We are going to ring the bell to officially start this earnings call, and then we're going to dive deep into the numbers by ringing the bell. Let me just pull up the stock. Oh my goodness, 923. I did not expect this to be 923. Here we go. This is what you get for being a long-term investor in Palantir. Some of the days are tough. Sometimes you've got cart banging on tables. You've got stupid articles being written that you're the world's most evil company. But then other days you post net income on a GAAP adjusted basis for your EPS. You tell your shareholders, hey, we know you stuck with us. We're going to be freaking profitable this year. And then your stock rallies 20% after hours. Ladies and gentlemen, welcome to the Palantir Q4 earnings 2022 live stream. Woo! Okay, we are here. It is time to keep going. Now, 1,017 people, thank you all for being here. It means the absolute world to me. Feel free to check out this channel. This channel mainly covers stocks, finance, and a big focus on Palantir. A lot of you have been with me since November 2021 when I begun covering the company. I've done close to 500, 600, 700 videos on them. I've done a Palantir weekly podcast for the past 52 weeks. The reason for that is because I genuinely believe in the company, and it's exciting to cover a company that has all the potential that Palantir does. I think this is a stock that can do really well over the next 10 years. Is it the next Tesla? I don't know. Is it the next Salesforce? I don't know. But what I do know is it's fun enjoying the ride. So let's get into it. Let's pull up the actual IR and then we'll see if the presentation came out. Does anyone know if the presentation came out? Let me check real quick. Financials, quarterly results. We got it. Perfect. Okay, perfect. Let me download this real quick. And let's get into our earnings result. The call is going to start in 20 minutes. So we have about 20 minutes before we get into the call. And then we will discuss then we're going to hear CARP stock. Now, the other thing that's interesting is last time they did a full year update, they did a very extravagant type of production, right? CARP was like wearing a suit and they had like pink, purple lights in the background. I don't know if they're going to do the same, but I would hope they do the same because not only is it the full year update, they have some really good news, right? You're like, you guys are getting close to profitability. That would be a good thing. All right. So Q4 2022 highlights. We achieved GAAP net income profitability for the first time in our company's history, 2 years after going public. No one can keep saying Palantir is not a profitable company. They got GAAP net income. Now we just need, fully GAAP profitability. That'll happen towards the end of this year, which will be amazing. GAAP earnings per share is 0.01 cent. They did 0.04 cents, but that's not GAAP earnings per share. On GAAP earnings per share, they did 0.01 cents, which is why it's a big deal. Revenue growth, 18% year over year to $509 million in Q4 2022. Look, we want revenue growth of 25, 30, 40%. Just remember, this was a year in which we had a Russia-Ukraine war, and we had a massive recession with the S&P going down to 340, almost down 25% year over year. So in a tough macroeconomic environment, to put up $509 million, especially in the last quarter, is not the worst thing in the world. Adjusted operating margin of 22%. That number is low. I wish it would get closer to about 27%, but it's not the worst thing given the fact that they were able to get GAAP earnings per share being profitable. 261 deals closed, up 20% year over year from 217. Now, I don't know what deals necessarily means. I don't know if that's clients in general, commercial, government, international. So we'll go deeper into and we'll see what that is. But 20% year over year from 217 deals, that's a lot more deals happening in the quarter. Business grew 31% year over year to 1.2 billion in full year 2022. This is a U.S. business. So U.S. business above 30% year over year growth. Commercial revenue 67% year over year. CARP basically said they're growing at around that 60% range. So that's pretty nice. Revenue 24% year over year. Look, we want revenue at 30%. Palantir said they will CAGR at 30% revenue, compounded every year. This is one of those years where they're not getting to 30%. Let's hope they're sandbagging and they can get to 30% next year. But this is one of those years we're not getting 30%. It is what it is. We have to deal with it. Again, this year has been crazy, but nonetheless, at least 24% is not the worst thing in the world. It's not the best. I'll be honest with that, but it's also not the worst. Customer count increased 55% year over year to 367. You've got companies like Snowflake that have like 6,000 different customers. Obviously, Palantir is much smaller than that, but Palantir is selling a product that they have, convinced investors and, the broader markets is a really big deal. And so their customer count is smaller, but their growth potential is, ultimately unlimited given how much room they have to grow. And we are getting in the early stages. Adjusted operating margin of 22% in full year 2022 and 976 deals closed, up 61% year over year for the full year, not just the quarter, the full year. 976 deals closed, which means they've been working. And we've seen a lot of those press releases throughout the year. They had FoundryCon, so you got all these slides. We'll go to those later. Products launched at FoundryCon, scheduling primitives, Foundry, Marketplace Developer Suite. This was the big one. Process mining and automation suite. That was good. We'll get into these a little bit more. And now we can get more into the financials. Okay, I'm going to respond to all the comments in a second. I just want to get through some of the core things, and then I'll get to the comments in about 5-6 minutes. Gap income, net profitability. This was the biggest thing. Look, this surprised me. I didn't expect that. In my morning stream today, I said, look, I don't know. Like, we usually tank on earnings, but after hours, I guess they had something special for us. Look at that beautiful chart. Q4 2021, they were losing 8 cents per share, then they were losing 5 cents per share, then they were losing 9 cents per share, then they were losing 6 cents per share. Now they are making 1 cent per share. It's a big deal if you're a Palantir investor. A lot of companies like Google, Amazon, they're making hundreds and hundreds and hundreds of billions of dollars in profit. We're not there yet, but that's also why buying Google, the ROI might not be there yet versus buying Palantir. So it's cool to see them in these early stages. U.S. business generated $1.2 billion, nice 32% year-over-year growth. U.S. commercial revenue growth, 67%. U.S. governmental revenue growth, 22%. So government revenue growth is declining. And there's a lot of reasons for that. Carp has talked about that. We'll hear what they have to say in this earnings call. But honestly, it could just be a lack of closing deals. The government's busy, budget concerns, a lot of that stuff. We'll hear what they have to say about the government growth. What matters to me the most is commercial. This company is not going to be a 10Xer on the government. And that is something everyone should understand. This company is going to 10X if we can explode commercial revenue growth, which is not easy. It's not an easy thing to do. Like, let's not kid ourselves. It's a very difficult thing to do. You need a robust sales force. You need a really strong go-to-market strategy. And Palantir has not proved they can do that. But 67% year-over-year growth U.S. commercial is not horrible. I mean, it's not something to get sad about. And let's see how they keep growing. Government revenue growth declining year-over-year at 19%, but still $1 billion in full year 2022. We will see if we get more revenue as a result of the Ukraine-Russia war and other things that they may happen. Shout out to Jeremy Financial Education. He just texted me. He said, Palantir, let's effing go, baby, booming. Shout out to you, Jeremy. Thank you. We're gonna have to get you on the channel to talk about the earnings after a couple of days. Commercial revenue growth 29%, $645 million up to $834 million. We ended full year 2022 with net dollar retention of 115%. Not bad. Net dollar retention, not bad. I think this is a little bit lower than 120, but overall not bad at all. 115% in net dollar retention. We added 30 net new customers in Q4 2022 with total customers up 9% quarter over quarter. This is something you would want to see more, right? You want to see more than 30 net new customers, but 30 net new up 9%. It is still growth. Our total customer count grew 55% year over year. So overall, 55% year over growth. It could have been 60, it could have been 65 if they had more than 30 net new customers, but 55% is not bad. Again, there's nothing in this earnings that I'm seeing so far that is atrocious. Last earnings, it was bad. I'm not gonna lie. It was not nice to see that. Some of their numbers just weren't that good. So I'm not seeing anything that's horrible yet. And as I dive deeper into it, we'll see the numbers. But nothing off the face is necessarily making me feel that this was a bad quarter. Average trailing 12 months revenue per top 20 customer is up 13%. Now, this you can interpret as kind of good or bad. So basically what this means is that means every customer that Palantir gets, but like the top 20 customers that they have, the revenue that those customers are making are $49 million a year. Now, the bad way to interpret this is, okay, Palantir needs to get to customers making like $2 million a year because that shows they have a much more scalable commercial business. And that means like they can expand across the entire world. The good way to think about it is that those customers might be making 13% more revenue because of implementing Palantir software. So there's kind of like an internal nuance for why Palantir has these high level customers that are making so much revenue because they're working with very elite people that need their services to increase their revenue. But obviously you want this number to go down a little bit more in order for them to be a little bit more scalable. Deals closed up 61% year over year. Look, you can't say anything about that. 61% year over year deals closing. That is freaking good. 21% in billings increased to 1.8 billion. I believe this is not collected yet, but that's what they've been able to bill their clients for. Q4 2022, we closed 55 deals of at least 1 million. Oh, this is interesting. Okay, 11 of which were at least 5 million, 5 of which were at least 10 million. Okay, let's spend some time on this. This is actually really good. And then I'm gonna get to the comments in just a couple minutes. I just said that it's actually concerning sometimes if their top 20 customers are making too much revenue because that means Palantir is not scaling. But that was the top 20 customers, and they added 30 net new deals. They closed 55 deals, which means 25 of these deals, 55 minus 30, was additional add-ons, almost like extensions, because 30 net new customers, 55 deals, that means you have 25 that are existing clients of at least 1 million. That's really good because That means if you're getting to at least 1 million, that means these are smaller deals, which means you're kind of scaling a little bit more into the small business sector. 11 or 5 million, 5 or 10 million. That's not bad. And I would imagine, maybe 20 of these are like 30, 40, 50, $100 million deals. But getting to at least these smaller $5, $10 million deals, these are actually what I want to see, because that means that more and more businesses that are doing, $300,000 a month in revenue could potentially pay for something like Palantir to optimize them to save a little bit more money. That's where I think we get some broader growth over the next years. Adjusted gross margins, 82%. Makes sense. Software business shouldn't be lower than that. We ended 2022 with $2.6 billion in cash and debt. As of December 31st, 2022, we maintained total undrawn commitments under our credit facility. They did get that from Morgan Stanley, or I think it was JP Morgan, one of them. So their balance sheet is amazing. I mean, $2.6 billion in cash and no debt. Interest rates don't affect Palantir outside of the macro because they don't need to borrow money and pay high interest on that money because they have an amazing balance sheet. Full year 2022 adjusted operating income was $421 million, representing a margin of 22%. Okay, so this is probably the worst thing I've seen so far, and I mentioned it at the very top of the stream. Adjusted operating margin going down from 31% to 22%. Now, what are the reasons for this on a high level before I get deeper into the numbers? Salesforce, right? You're making 31% margins, but then you have a Salesforce. You got sales, right? You got to pay for salespeople. Marketing, obviously marketing is very important, and they've spent a lot more on marketing. If you just look at their YouTube ads and sort of FoundryCon, I mean, FoundryCon had to cost like $1 million to throw, right? Very big event, a lot of people, all the camera gear, all the renting out the conference where they rented out the arena, whatever it is. Maybe $1 million is a little bit too high but like flying people out, they probably covered flights. So you would imagine these things have reduce their operating margin. I don't necessarily think it's a problem with the business because the business has 80% operating margins. So if the business has 80% operating margins, then that means that overall there are other expenses that are there. Give me 1 second, guys. Chris is calling me. Let me talk to him. Yo, are you available to do the stream? Okay, I'm sending you the link right now. Okay. All right, bet. Okay, cool. I didn't know if Chris was going to be able to do the stream, so let me just send it to him real quick. Chris, for those who don't know, is our fellow Palantir friend. He'll finally have some nice things to say today. Maybe he jumps into the stock again fully. So again, the operating margin going down, it's annoying, but sales and marketing is probably the main reason for that. Maybe there's some other reasons. We'll get there. Okay, full year. They expect $2.2 billion. I think this is sandbagging. This is only 20% year-over-year growth. I think it might be sandbagging. Maybe I'm wrong. We'll dive deeper into this on the Palantir Weekly podcast, and we'll see. 481 to 531 of adjusted income and GAAP net income. I have never been happier to see those 3 words, GAAP net income. The last time I was happy to hear 3 words, it was Leave Me Alone by a girl that, no, I'm just kidding. But it was actually I Love You by my ex. No, it's not because I don't really care about her anymore. But nonetheless, GAAP net income. Those 3 words, those are great 3 words for a Palantir shareholder. I mean, those are the 3 juiciest words I've seen in a very long time. And if we get there, which they said we're going to get there, we will be a freaking profitable company. And let's see how much profit we can make over the next couple of years. Revenue of about $503 million to $507 million. So first quarter 2023, we are not going to be having any revenue growth. We had $510 million. If we get to $507, we will have a decline of 0.01%. That's okay. Not the biggest deal in the world. Adjusted income from operations of $91 million to $95 million. So let's see. Okay, we're waiting for Chris. We're going to have earnings in 10 minutes. I'll get back to the numbers, but I want to read some of the comments. First of all, 1,400 people here. Thank you so much for being here. It means the absolute world to me. If you are here, I have one request from you for being here. It would mean the world to me. Please follow on Twitter. I'm putting the Twitter link in the description. It would mean the world to me if you could all follow on Twitter. I try to do a decent job covering Palantir stocks and a lot of other stuff on Twitter. So if you could follow on Twitter, if you don't have a Twitter account, make a Twitter account, help Elon Musk out. He's got to pay some interest on his debt payments. The problem is Palantir has to pay no interest on our debt because we have no freaking debt, but Elon Musk does. So he needs a new account. So if you're not on Twitter, get on Twitter and make sure I'm the first account you follow. That is the only ask I have of you of this entire stream. Okay, let's get into some of the comments. Chris is about to come up and then we will talk to him. First of all, David Kelly, thank you for being in the chat. Kelly, I have not talked to you in a while because I know you're traveling, but thanks for being here. Amit using Palantir software to stock. Yo, you, Netflix, Joe, I watched like one episode. Joe is he's carrying that show. And I see a little bit of myself in Joe outside of like the killing part, but the whole like I like you. That part is really cool. You know, November 2021, when I saw Palantir, I was like, I like you. And I dropped $25,000 at fucking $22 of an average price. But nonetheless, you know, this is what happens when you fall in love with someone. Calm down a bit. I need your channel for research, bro. I appreciate you, bro. TJ, thank you for being here. Let's see some of these other comments. Mitch sounds so excited, like a kid in a candy store. You know, I didn't expect it. I really didn't expect it. I didn't expect this good of an earnings. Love you, Amit. Carlos, thank you for being here. So it's really exciting to see people here. It's really exciting. Uh-oh, we got a super chat. Whoa, Jeremy, financial education, words to the wise, let game-changing companies run. They go on amazing runs over a 3 to 5 year span. Many people are so quick, they take breadcrumbs rather than go after a loaf of bread. Financial education, $50. It's a lot of money. I mean, thank you so much for that. That means the world. And thank you for being here, part of this live stream. Let's get you on the next Palantir Weekly so you can give us your thoughts. Jeremy entered the stock about 7-8 months ago, and he's been a big proponent of the community. So thank you, Jeremy, for being here. Chris, what's up?
What's up, man?
Okay, I'm gonna load up this earnings call, but I've been talking for a while. What were your raw reactions to what we got?
It's good, man. Finally, they're making some big changes. It's nice to see. I'm actually still digesting, so give me a minute.
Yeah, I mean, I'm digesting it a little bit as well. I was in the car while the earnings came out, so all I saw was the stock price jump up, but I didn't see anything else. And I was trying to find the earnings, but they were always delayed. And then finally, someone tweeted, and they were like, they expect to be GAAP profitable. And I was like, holy crap, that's a big deal. I mean, that's a big deal. We thought 2025, and it's 2023. So that's not too bad at all. Not too bad at all. What else we have? We have some comments. What's your average price? Average price is $16 right now. Amit, how good are these earnings? Amit out to lunch. Look, I think the earnings are good. The market obviously likes it, but we do have CPI data coming out tomorrow, which may destroy earnings, quite frankly. Stock is at $9.10 right now. It's up 19.77% after hours. We have not had a move like this really since the meme stock era of 2021. So it's a big move for Palantir.
This is one of those things that could be the turning point for the company, right? Because a lot of the estimates were not around them reaching profitability, but I guess one of the things is I got to do a deep dive on the earnings and see if that government revenue finally started coming in. Remember, I told you guys that GovRev was just like the government's like that. You know, sometimes they pay on time, sometimes they just make you wait. And now I guess that money's starting to come in. So let's see.
Why do you think it could be a turning point for the company?
Well, I mean, I was looking at some operating metrics that they had. It seems like they're trending in the right direction. So I think those things are going to help. I mean, we've seen the increase in marketing where they've actually been doing much better with that. And I think there's also part of it that a lot of companies are jumping on the AI bandwagon, and Palantir has actually authentically been part of the AI community for quite some time. So it could be that a lot of companies are starting to see that, you know what, we need to get into AI, you know, whether it be because we're adjacent to AI or because our business needs it in order to compete effectively with other organizations. So I think Arnie actually did a live stream about one of those things where AI was part of, Palantir worked with OpenAI for certain parts of their programming. So let's see what happens. I really want to see what the earnings look like and what they have the commentary. You know, hopefully.
Chris, did you get to see the stock-based comp? I'm pulling it up right now. I didn't get to look at that.
No, not yet.
So let me share that, guys. We have earnings in 5 minutes, and then we'll be streaming it live. Thank you all for being here with us. They usually have stock-based comp inside of the. They don't have it here. Maybe that might be a little bit of a red flag. Stock-based comp might not have decreased. They usually have it on the thing, on the actual press release. Yeah, it's not there. Either they thought it wasn't, maybe it reduced, but it wasn't enough of a reduction to put on the balance sheet on the press release, or it might have gone up a little bit. So we will see for stock-based comp. But usually it's there, so it's not there. All right, so we have earnings in about 5 minutes. TJ, the wheel deal, thank you for the $50 super chat. Appreciate you, man. It means the world. TJ is also a big Palantir bill, has a much larger position than me, big on SoFi as well. So thank you, TJ, for the super chat and for being there. Everyone also check out his channel. He's a brand new YouTuber. Would love for you guys to check out his channel. Very big SoFi and Palantir position. Chris, were there any numbers that stood out to you immediately? So, let me ask you this: revenue 18% year-over-year growth, $509 million. Did you like the revenue number, or did you think that 18% still wasn't enough of a bit?
I mean, their valuation is still kind of stretched right now, but they're trending in the right direction. Now it's all about consistency, right? But I think the most interesting thing that we saw was customer count.
Yep.
Look at that customer count. It is crazy. Customer count grew by 55% year over year.
That's wild.
US commercial customer count grew by 79% year over year, from 80
Really?
customers
US
to
commercial?
100.
I didn't see that. I thought it was
Yeah,
67%.
no, look it up. Look
Oh,
at
that
it's
was
on the
revenue.
press release.
67% was revenue. Customer count was 70. That was a different number. Got you.
Yeah. So
Gotcha.
you can see that there are a lot more customers. I told you before, their whole thing was we're only going to work with the biggest companies, blah blah blah. I think that was a dramatic shift. They're like, now they're just like, we are going to work with whoever we can work with, you know.
Okay. And by
So
the way, I got stock-based comp. Here we go. So stock-based comp was 10.6 versus, so it went up a little bit from Q3 2022, as you can see, right? So that's why they didn't put it. It went up a little bit. I'm assuming it. Okay, so it's flat basically. So if Q3 was down 29% year over year from Q3 2021, Q4 because the number is relatively the same. I get it. It was too insignificant for them to put up there. It's basically the same. It's up slightly a little bit, so it's still down 30% year over year, but not growing continuously going down. I would have liked to see that. So that's one number I really would have liked to see, but stock-based comp is not going down as aggressively. Okay. Makes sense for that.
like I said, I think the fact that they're reaching out to so many more customers is a good thing. They have a long way to go before before other companies who might have already had so many partnerships. But I think they're headed in the right direction. They're controlling costs, which is being seen in their income. Those SPAC losses are finally gone, right? Where now they don't have to adjust their earnings for those SPAC losses anymore. So I guess that's something. Where's the government revenue? I want to see where that is.
Yeah, I mean, look, gov revenue, I saw it, and it's down 19% year over year. So they did 1.72 billion in gov revenue. It's up 19%, but it's not obviously growing like it was.
So
40%.
yeah. So here's the thing now. Now, effectively, this is what you're going to use to model out what the returns are going to look like over the next 5, 10, 15 years, whatever. Because now it's about consistent growth, right? There are points where you have like this whole thing where you're going kind of like a nice jump straight up because you hit some kind of S curve. Remember when we had that conversation on Palantir Weekly last week? We said, I think we're more likely to see Palantir almost act like a Salesforce, and that you have a nice consistent growth pattern over a long period of time, rather than like an S curve like Tesla, where it was like, oh, you achieve profitability, boom, everything is just now overvalued all of a sudden, you know.
Right.
So
you know, and if we get the Tesla run up, it'd be amazing. If we don't get it, you know, then it's a longer term game. But I mean, the biggest thing to me was this number on profitability. I mean, the fact that they're expecting it. By the way, we have earnings that should be starting really any minute now, so we'll get into it. But the fact that we're getting profitability, that's the headline.
I don't think we're going to see the Tesla S curve, because the Tesla S curve ends up being something along the lines of, you have a new product that's literally like that comes out, that's a consumer level product, that's like a hit in the market. This is more like a long, slow trudge up the value chain. And
the Tesla S curve is like 40, 50, 60% year over year growth. So the only way that trudge becomes more exponential is if Palantir's product is what they say it is, which is like the entire world needs our shit, right? Like if that happens, maybe we get like a consumer level product mass adoption, but odds are that's not going to happen. But it can still have a good return. It just won't be, you know.
It's all about TAM, right? The TAM the TAM is what is huge. So in order to capture as much TAM as you want to have nice, consistent, long growth. Not to mention there's a lot more to adopting a SaaS product than there is to just buying a car, right? It's two different businesses. So I said, I think it's definitely something around nice, consistent growth. And if this is the growth that we're going to see for the next 5, 10, 15 years, what you're going to see is, even though this was a small net income, like literally it's just a very small.
People are saying the earnings started. We're on YouTube. The earnings have not started. I mean, I'm refreshing the page. This is their official webcast. It has not started for us. So if you guys have a different link, please put it in the chat, but it's not started for us. It's not there. So Chris,
Could
go
be
ahead.
on their investor relations page.
I did. I went to that. I signed up for that. Let me see if I got the link for that. That might be
Damn,
the more.
someone else dropped a $50.
Oh, it's up. It's up. All right, we're starting.
Yep.
Discussing the
Okay, here we go. We're starting. All right, everybody. We'll intervene a little bit. I'll pause. Me and Chris will give some of our thoughts, but for the most part, enjoy, and we'll have analysis afterwards.
call, we will make statements regarding our business that may be considered management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which would cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release, distributed after the market closed today, and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. You'll also be hearing from Shyam Sankar, our Chief Technology Officer, who prepared a few remarks but could not join today's call as he's on the front lines with one of our customers. I'll now turn it over to Alex for opening remarks.
At Palantir, we have a
Okay, so we're getting a little bit of it seems like maybe professional thing, maybe pre-recorded. Let's see how they do the earnings for this one.
tradition of talking about macro events, philosophy. There would be a lot to talk about this year. I think for the first time, people have seen the impact of the digitization of warfare and Palantir's central role in the world. Leaving aside this, and I would love to talk more about it in the context of our earnings call, in the context of our interactions with the broader world, the transformations on the outside of the world brought to you by Palantir seem to be equally big on the inside. Palantir, for the first time, is GAAP profitable. I, in most of my discussions, talk about product, talk about product market fit, occasionally talk about revenue, and I'm often asked, well, if it's so good, why aren't you GAAP profitable? We promised you GAAP profitability in 2025, which you thought would be in 2027, perhaps. We are now in the last quarter GAAP profitable, and we plan to be GAAP profitable in this year. Obviously, there's a lot of questions around that, like how did we become GAAP profitable several years before anyone expected? What does it mean for our business? What does it mean that seemingly no tech company ever becomes GAAP profitable? Why is our company profitable? What sectors of the company made it profitable? But for those of you who have been long-term supporters or even watchers of Palantir, the move from a company that was producing the most important products in the world to a company that is doing that in a profitable context is enormous, perhaps as big as our DPO. And we're proud of this because it gives us the strength and power to continue our march to support the world's most important institutions. Thank you.
As Alex highlighted, our company, after nearly two decades, achieved focus has been on building one of the most significant and durable software companies in the world. And our first profitable quarter, after years of investment in our business, represents the beginning of a new chapter in our company's history. In Q4 2022, we generated $509 million in revenue, and we generated $79 million in cash from operations, marking our 8th consecutive quarter of positive cash from operations. While the technology industry as a whole has been facing one of the most challenging operating environments in years, we continue to deliver on our top line and bottom line results, in particular, our combined revenue growth and adjusted operating margin. Our commercial business generated $215 million of revenue last quarter. While our U.S. commercial business slowed in the fourth quarter as a result of catch-up revenue in the prior quarter and contracting revenue from customers in our strategic investment program, we remain confident about our momentum and the opportunities ahead. We ended the quarter with 143 U.S. commercial customers, an increase of 79% year over year, and converted 13 pilots, the most in quarter to date, setting up our U.S. commercial business to re-accelerate in 2023. We are deploying increasingly focused go-to-market strategies, including in the healthcare, supply chain, manufacturing, energy, automotive, and utility sectors. The number of deals closed in healthcare more than doubled in the last year. We recently signed with several of the nation's largest hospital systems, including Cleveland Clinic, Tampa General, and one of the oldest teaching hospitals. Our momentum continues this year, having recently signed a deal with an American for-profit operator of over 2,400 healthcare sites. Together, these 4 hospital systems represent nearly 10% of the entire hospital system in the United States. In the supply chain sector, we've begun work at 2 of the largest Coca-Cola bottlers and distributors in
He's
both
talking about Kaiser
the EMEA
Permente.
region.
Kaiser
And we
is
were
that
called
big.
into Toyota Material Handling, a forklift manufacturer and distributor, after executives learned of our comparable supply chain work at Komatsu. Cardinal Health also recently began using Foundry to deploy AI and ML to combine diagnosis and clinical data with real-time customer purchasing and consumption data for pharmaceutical products.
Got to give that up to Chris. Chris talked about how Cardinal Health would use AI and machine learning, how Palantir would implement that. That's a big deal. That could be big in the healthcare space.
Our international commercial business grew 11% year over year in the fourth quarter, including a multi-million-dollar long-term strategic partnership with Crisis 24, a Garda World company, to deliver data-driven security and risk management, and a $50 million 5-year expansion of our work with Sampo Holdings, where Foundry is helping to improve security, health, and well-being through digital transformation. Our government business overall saw growth across the board as well, as we generated $293 million in revenue this past quarter, an increase of 23% year over year. Our U.S. government business saw continued growth in Q4, up 22% year over year, which reflects the strong contract activity in Q3. Likewise, our international government business was up 26% year over year, including the expansion of our work supporting pressing global events, as well as the signing of Palantir's enterprise agreement with Defense Digital, a consolidated effort on the part of the British military to modernize its software systems. With a value of up to £75 million, we expect this agreement to further accelerate the growth of partnerships with defense and intelligence customers across the United Kingdom, as well as our UK government business overall. This quarter's GAAP profitability illustrates our commitment to fiscal responsibility through management of margins while expanding our business. We acknowledge the challenges ahead and remain strongly poised for long-term growth. I'll now turn it over to Sham.
So not only long-term growth, they're trying to be fiscally responsible, trying to get those margins up, and trying to also make sure they're profitable. Here's Sham Sanker, COO, talking about their quarter.
In 2022, our software foiled a plot to overthrow the German government, delivered $200 million of return to Tyson Foods, and powered companies through the energy crisis. Our momentum stems from the fact that we have built software that actually works, not software that's easier to sell. We publicly announced Foundry 23 at FoundryCon 2 weeks ago. The cornerstone of our product vision is that your business is computable. But just because it's computable doesn't mean you know how to compute it. This requires an ontology. Ontologies link human insight with programmable controls, enabling your people to compute the parts of your business that really matter. For example, Tyson Foods implemented a model that determines the optimal allocation of inventories to trucks and distribution centers and automatically decisions that by calling back into their ERP systems the ontology's webhooks. This work, among the 20 use cases Tyson's delivers in Foundry, delivered $200 million of value for them. Upgrading to S4 doesn't do this. It doesn't make your business better. Your planning tools and pricing platforms don't talk to each other. ERP and MES systems don't talk to each other. So employees escape to Excel sheets, and business logic is scattered across systems. That makes your business hard to understand and harder yet to change or improve. Our customers need software to connect and orchestrate their existing systems. Your business is computable. You need Foundry to compute it. This view, and a focus on our ontology, is driving our product developments to 2023. Turning to Apollo, Just because you know how to compute parts of your business doesn't mean it's valuable. You need to
This is important. We haven't heard of Apollo in a while, so let's see if they have any business updates for that.
complete the cycle of development, deployment, and learning. Not only do you have to be able to push your logic out to the edge, to the factory floor, to every connected node in your business, you need to be able to do it repeatably. As technology companies seek to aggressively reduce cloud costs and eliminate DevOps headcount, Apollo provides the critical technology enabler that solves not only the CTO's problem, but also the CFO's problem. We're also continuing to see traction with FedStart, our Apollo-based offering, which enables customers to achieve FedRAMP authorization in record time and at a fraction of the cost, while still reducing DevOps costs. From the Middle Eastern, the Pacific, and European theaters, Gotham is today the AI-driven operating system for defense. Recent events have already proven the superiority of Gotham in AI-driven target detection and development. In 2023, we are focused on the continued development of Gotham against both targeting and fires across all domains, from space to mud. A forward-deployed O3 recently wrote a Python model using Gotham's software development kit for JADC2 in 3 hours to upgrade his unit's targeting and fires operation, a step change versus what was possible before. We're proud of and thankful for the privilege of supporting this mission set. I'll pass it to Dave to take us through the financials.
The fourth quarter of 2022 was a milestone quarter for us. For the first time in the company's history, we've achieved GAAP profitability. This was driven by our top line and bottom line outperformance, our continued management of stock-based compensation and fiscal discipline, the narrowing of losses for marketable securities, and a gain from the acquisition of our Palantir Japan joint venture. On the back of that strength, we expect full year 2023 to be our first full year of GAAP profitability, several years ahead of our original goal of GAAP profitability in 2025. Turning to our global top-line results. We generated $1.91 billion in revenue in 2022, representing a growth rate of 24% year over year. In the fourth quarter of 2022, we generated $509 million in revenue, up 18% year over year and 6% sequentially. We generated $1.16 billion in total U.S. revenue in 2022, representing a growth rate of 32% over the year-ago period. In the fourth quarter of 2022, U.S. revenue grew 19% year-over-year to $302 million. Overall net dollar retention was 115%. Customer count grew 55% year-over-year and 9% quarter-over-quarter. Revenue from our existing customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 13% year-over-year to $49 million per customer. Now, moving on to our commercial segment. In 2022, our overall commercial revenue grew 29% year-over-year to $834 million. In the fourth quarter of 2022, our commercial revenue grew 11% year-over-year and 6% sequentially. Commercial revenue from strategic investment contracts was $20 million in the fourth quarter. We anticipate commercial revenue from these customers to be between $15 to $17 million in the first quarter of 2023, compared to $39 million in the first quarter of 2022. Our full-year U.S. commercial revenue grew 67% year-over-year to $335 million. In the fourth quarter of 2022, U.S. commercial revenue grew 12% year-over-year to $77 million, but was down sequentially as we saw headwinds from catch-up revenue in the prior quarter, as well as a decline of revenue from customers in our strategic investment program, given the outsized impact of the macro environment on these customers. Our U.S. commercial customer count grew 79% year-over-year and 8% quarter-over-quarter, marking the 8th consecutive quarter of sequential growth. In the fourth quarter of 2022, our international commercial business grew 11% year-over-year and 19% sequentially, driven by new deals in APAC, Canada, and Europe. Turning to our government segment. In 2022, our government business grew 19% year-over-year to $1.07 billion. And in the fourth quarter of 2022, our government business grew 23% year-over-year to $293 million. We generated $826 million in U.S. government revenue in 2022, representing a growth rate of 22% year-over-year. In the fourth quarter of 2022, we generated $225 million in U.S. government revenue, representing a growth rate of 22% year-over-year and 8% sequentially. The sequential growth was driven by the commencement of certain U.S. government deals we announced last quarter. Fourth quarter billings were $387 million. Full year billings were $1.8 billion, up 21% year over year. TCV booked in the fourth quarter was $392 million. Full year TCV bookings was $2.7 billion, up 4% year over year. We ended 2022 with $3.7 billion in total remaining deal value and $973 million in remaining performance obligations. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in our government business. Both remaining deal value and remaining performance obligations faced headwinds from the macroeconomic impact on customers from the strategic investment program. As a result, the total remaining deal value and the total value of our commercial contracts from our strategic investment program was down $262 million since last quarter, as we continue to review the financial condition of these businesses. We'll continue to monitor the impact as the year progresses. Turning to margin and expense, adjusted gross margin, which excludes stock-based compensation expense, was 81% for the year and 82% for the quarter. Full year 2022 adjusted expenses, when excluding stock-based compensation and related employer payroll taxes, were $1.5 billion. Fourth quarter adjusted expenses were $394 million, down roughly 1% sequentially, reflecting measures we took in quarter to manage discretionary spending and our focus on efficiencies. Full year 2022 adjusted income from operations, which excludes stock-based compensation and related employer payroll taxes, was $421 million. Fourth quarter adjusted income from operations was $114 million, representing an adjusted operating margin of 22%, 600 basis points ahead of our prior guidance. The significant beat on our adjusted income from operations guidance was driven by cost savings from our R&D efforts and disciplined spend management, as well as moderated net headcount additions in the fourth quarter. The fourth quarter of 2022 was our strongest GAAP operating income quarter ever, as we move closer to break even with an operating loss of $18 million. This is a testament to our disciplined spending amid the macro uncertainty, as well as the normalization of our stock-based compensation expense overhang since becoming a public company. Stock-based compensation expense was down $38 million in the fourth quarter compared to the year-ago period and down $213 million compared to the year-ago period. As we look ahead to 2023, we will continue to exercise spend discipline across the company, pace hiring, while continuing to invest in high-priority areas, including in our product offerings, building out a go-to-market strategy, and technical roles. In addition to GAAP profitability for full year 2023, we anticipate improvement in our GAAP operating income margins over the course of the year. Fourth quarter GAAP net income was $31 million. This was a result of a strong GAAP operating quarter, in addition to $13 million of investment income from our balance sheet, narrowing of losses on marketable securities to $11 million, and a $44 million gain from the acquisition of our Palantir Japan joint venture. But it's not just our GAAP profitability and operating performance that I'm excited about. Our combined revenue growth and adjusted operating margin was 40% in the fourth quarter and 46% in full year 2022, our third consecutive full year in excess of the Rule of 40, and a score that we will continue to strive to achieve throughout 2023. Full year adjusted earnings per share was 6 cents, and GAAP earnings per share was negative 18 cents. Fourth quarter adjusted earnings per share was 4 cents, and GAAP earnings per share was 1 cent, marking our first quarter of positive GAAP EPS. In the fourth quarter of 2022, we generated $79 million in cash from operations, representing a margin of 15% and our 8th consecutive quarter of positive cash from operations. For the full year 2022, we generated $224 million in cash flow from operations, representing a 12% margin. We ended the fourth quarter with $2.6 billion in cash and cash equivalents and no debt. We retain access to additional liquidity up to $950 million through our $500 million revolving credit facility and $450 million delayed draw term loan facility, both of which remain entirely undrawn. Now, turning to our outlook. For Q1 2023, we expect revenue of between $503 and $507 million and adjusted income from operations of $91 to $95 million. For full year 2020.
All right, we should be getting to the questions soon. I know this was a lot of the boring stuff, but a lot of this was pre-recorded. We'll get to the questions and then see what they have to say live.
2023, we expect revenue of between $2.18 and $2.23 billion, adjusted income from operations of between $481 to $531 million, and GAAP net income. Before opening the call up for questions, I'd like to take a moment to thank Jeff Buckley, our outgoing Chief Accounting Officer, for his contributions to Palantir. Jeff's been an incredible leader and a member of our team on the journey from private company to public company. We announced a few weeks ago that he'd be stepping down after the filing of our 10K, and we're grateful that he will be staying on with us after to help with a seamless transition. We're excited to promote Heather Planishek to the role and look forward to continuing to build on both Jeff's and the team's successes. With that, I'll turn it over to Anna to start the Q&A.
Thanks, Dave. We'll begin with a few questions from our shareholders before we open up the call. The top questions all related to GAAP profitability, with the number one question from Abraham, who asks, when is Palantir going to become profitable?
Well, we're profitable.
Real quick, this was the number one question, which also makes sense on Say Technologies. This is the number one question from retail. So this is what Karp's got to say about profitability.
And we will be profitable this year on a year basis. I think because if you look at the questions that come to us and just the questions I get from clients and others, one of the main questions we've gotten in public and in private is, well, we know the products are transformational. We've seen them in the context of anti-terrorism, especially in Europe. We've seen them in the context of the pandemic and now in the context of changing the course of history in Eastern Europe. But if it's so powerful and so good, why aren't you profitable? And I think, we took this question a lot more seriously than I think people on the outside realize, precisely because there are literally thousands and thousands of users and at this point, countries that depend on our product for their survival. And while many of us watching this are obviously highly attenuated to share price, the people whose lives depend on our product have been very dependent on us and want to know that our financial stability now and in the future is guaranteed. So this has been much more of a priority to get us to this place. I'm happy that we have long-term supporters and shareholders that are interested in this, and we will continue to be profitable this year. And so it's just a major achievement for Palantir. I think another reason the question gets asked is because seemingly no tech companies ever become GAAP profitable, and that does call into question the underlying value of their products. Yes, with that, next question.
Thanks, Alex. We also received a few questions on ChatGPT and AI.
Let's see what he has to say about the artificial intelligence revolution.
To differentiate and compete with other AI software solutions and demonstrate the return on investment for potential clients?
There's been a lot of talk about recent events in the consumer internet and OpenAI and the incredible technologies that have been brought to bear. I think the biggest event in digitalization, AI, is actually on the battlefield. Palantir took over basically non-public programs when the rest of Silicon Valley at the time was very interested in not working with the military, potentially also opening offices in adversarial countries. At the time, AI was a joke, and most people purveying it were partially purveying some form of a PowerPoint bordering on fraud. And so we had a lot of thought going into this and spent the last 5 years building the core infrastructure that you would need to power and train AI algorithms. The proof in the pudding is simply look at events in Eastern Europe. And so every country in the world is looking at how to do this. But what's super interesting in the consumer context is the technologies we built that will allow you to do AI in private networks, institutions and enterprises have precursor technologies that will take other companies 4 or 5 years to build. For example, how do you do AI in a regulated context? Look at a lot of our clients. They're almost all regulated in one form or another. Oil and gas is regulated. Hospitals are regulated. Healthcare is regulated. Manufacturers are regulated. You can't just run an algorithm on a private network the same way you could on a non-regulated public network. And then there's security issues. There's transparency issues. In the war context, how do you know if the AI made the decision? Under what conditions does the AI make the decision? Under who is responsible? What is the chain of authority? How do you do it while maintaining security? Because some of the people using the product may actually be working for the other side. There's just thousands and thousands of issues here that required years and years of software build, which we are now going to continue to supply to our allies across the world and to our consumer customers. So we're very, very excited about this, excited about the interest. and excited about bringing the fight to our adversaries.
Thanks, Alex. We received a few questions on SBC and dilution, including one from Christopher, who asks, at what point is Palantir hoping to reduce SBC?
Thanks, Christopher. We're laser focused on SBC, and we have been the last few years. If you go back to the quarter that we went public, Q3 of 2020, we had $849 million in that quarter of SBC. You go back to Q4 of 2022, just last quarter, it was only $129 million. The last 6 quarters,
849 to 129 million. Look, that's a steep decline. You want to get it further down, but that's not a bad decline at all.
we've been down sequentially each quarter with our SBC. And 2022 versus 2021 is down 27% year over year. Stepping back, the ultimate test around SBC is really like, are you GAAP profitable? And the answer now is yes. It was yes in Q4. And as we look forward to 2023, the answer is yes there as well. Equity overall, we want to make sure that we align our employees and our stockholders. And you sort of see that in the current results, which are resulting in GAAP profitability. And so we plan to keep that alignment, to push on the top line, improve the margin, and to stay GAAP profitable.
Thanks, Dave. This next question's for you, Ryan. Zachary asks, what are Palantir's primary goals for 2023?
Thanks, Zachary. We're planning to keep our heads down, keep doing what we've been doing, which means delivering to our customers on their critical missions with an eye towards long-term growth. And what that specifically means is continuing to focus on both top line and bottom line, our revenue growth, adjusted operating margins, and delivering on GAAP profitability as we've laid out. In the US commercial space, we grew 67% year over year. As I highlighted earlier, we have a lot of strong indicators of momentum going into this year, and we expect to deliver another landmark year in US commercial. In the US government space, we'll continue doubling down on the backbone of our business, one of our most important customers, which means seeking to accelerate defense, civil, and intelligence space. And obviously, there are factors such as whether or not there's a continuing resolution that might affect the timing of that, but our long-term outlook on US government is extremely strong. In the international space, we're looking to grow the defense business outside of the US as our allied countries are looking to deploy the expertise that we've honed over 20 years around the world in the most important missions. We're looking to grow our work in civil. We're particularly excited about healthcare and keep our momentum in the UK government. And all while doing that, we seek to continue to deliver on GAAP profitability.
A different version of that is we will maintain our discipline around GAAP profitability precisely because the world is recognizing our crucial contribution to the West. We see this in war. We see this in the commercial areas. We see this in healthcare. We see this where people are embracing technology, especially in the US, especially around AI with security models in private networks. And so there's a tethering between our financial discipline and our ability to just continue crushing in the service of what we believe is important, Western institutions, and that they survive and thrive better than our adversarial institutions.
Thank you, Ryan and Alex. Our next question is from Brent with Jefferies. Brent, please turn on your camera and then you'll receive a prompt to unmute your line.
Afternoon, Dr. Karp. As it relates to the government business, I'm curious if you could just give us an update. I think last year you had mentioned there were a handful of transactions that got pushed and ultimately not exactly sure what happened there. If you could address that. And then secondarily, there was a CNBC reporter that I think you spoke to, just had some comments about strategic interests in Palantir. And I'm just curious if you can just recap maybe what that conversation was and just ultimately how you're thinking about current multiples and where things have gone to at this point. Thank you.
Taking the second question first. Really, we've been asked. We were asked a number of reporters have asked me, and in general, look, you have a general move where in the last 5 years, enterprise software has moved from being a sales motion to an existential part of the enterprise, whether the enterprise is commercial or in government. The war in the Ukraine proves this. I think most commercial entities in America know this. It's not clear that people know this outside of America, but this is a crucial part of your enterprise. It's also pretty clear that we've built proprietary technology that will allow you to do this in private networks in the context of regulated enterprises that is not available anywhere else. And it would take years and years to build. And that just generates a lot of interest in not in Palantir in a way that you didn't have before. And so our basic view of Palantir is we are in this to make institutions of the West stronger. We believe we're winning. Because we're winning, I think there's going to be a lot of interest in us in buying our software and potentially in buying us, but we are pretty focused on our product, which is us. So really not thinking about that very much at all. Gratified that there's been speculation all over that people might want to buy us, but that's really irrelevant. Then on government, there's really, you're asking about the U.S. government. The U.S. government has these continuing resolutions. We have a number of large-scale contracts that are in the works. There's really no update. The only update is this call is coming from Washington. It's coming from Washington because regulators, people in Congress, and people in the military also have seen what's going on. And there's just a different level of interest in what we provide. It's just, now, what does that mean year to year? I don't know. I do know that the CAGR on our U.S. government has historically been over 30%. And I think there's a debate among people who support us or don't support us, or whether that's going to be in the future. The future will represent the past. I would say, every time you open the news, you see another thing that makes Palantir more valuable, whether it's wars in the East or balloons over our society. This is a world that is dangerous, that needs AI-driven and in general software-driven weaponry. And no other company in the world has been focused on this for the last 20 years, and we are. And we are also on these programs. So the short version is no news. The long version is I'm very optimistic.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon. Sorry, long day for me. So my question is about the revenue growth into next year. Would you mind describing what are the main drivers that make 14 to 17?
By the way, we lost you. We lost you after what are the main drivers. I think what you're asking is what are the main drivers that will affect our revenue build this year?
Correct.
Yeah.
I don't know if you can still hear me or not.
Sporadically. I'll say, I don't know if you guys want to say a couple words on this, or do you want me to launch into my, you're our your head chief of,
Yeah. So I think, thank you, Mariana. So I think, as we highlighted, like momentum in U.S. commercial is strong. We expect it to be a key part of our growth in our business. U.S. government, obviously critical to our business. Now we expect to see more of that coming, later in Q2 and second half of the year. And then in the international business, I think it's continuing to deliver on, the defense related initiatives that we're working on. I think combined, those will be the key drivers for our.
Maybe a more direct answer, or one that, is roughly 61% of our business comes from the U.S. I think there's a lot of positive indicators that will continue to grow. I'm bullish on commercial. I just met with our commercial team. I suspect that will grow north of 40%. There's lots of reasons for that. Despite the fact that we may have a recession, and of course the recession is severe enough, it will affect our revenue in the U.S. But you see a lot of positive. Our customers went from something like 80 to 143 last year. It's almost 70%, 80% growth. And then in the U.S., we only have 15% of the top 1,000 companies buying our product, which means we have a lot of room for growth. And last and not least, arguably most importantly, in the U.S., all parts of the enterprise buy our product. So outside the U.S., it's really CEOs forcing business decisions on the company, which is historically how we sold our product all over the world. Inside the U.S., it's IT people, it's subdivisions, it's CEOs. It really doesn't matter. And they buy different parts of the product, and they're friendly to new things. And they've also gone through a cycle of seeing a lot of the enterprise products are just for churning and stirring your data, that there's not many results, and they're actually very expensive, and people are suspectful of having a compute model and something that gives you marginal. So U.S., it looks very strong. U.S. government, we've already been asked about. The weakness in our business is just non-U.S. commercial that grew around 12% last year. I think outside the U.S., they're a lot less friendly to new innovations. It's not clear how they'll react to AI, although we can do AI in the context of data protection. You just have a lack of receptivity in parts of Europe to new technology. So the over-under is the 61% of our business that is strong is growing and will be a larger part of our business. I suspect the macro environments largely driven by adversarial nations to America will help us. And then international government, I think that's very likely over time to be very strong because the Meta Constellation product looks like the most cost-effective way to defend your country in the world. And our Ukrainian allies are willing to talk about it and see its value. So I see a lot of, and we're already seeing countries that are on the border of adversaries being very, very interested in this product. So the way I would think about this is think of the U.S. I think of the U.S. as being strong, international government as being a real possibility, and a drag is just the economic and cultural events in Europe, which is still a significant part of our business. So that's the over-under.
Thanks, Alex. Our last question is from Gabriella with Goldman Sachs. Gabriella, please turn on your camera, and then you'll receive a prompt to unmute your line.
Hi, good afternoon. I think the video and audio should both be syncing. Great. A couple of follow-ups on your commercial business. Firstly, could you give us a little detail on how the large deal pipeline is evolving? And is the macro impacting your ability to close any of the deals in the US on large deals specifically? And then secondly, as you think about the mix between large deals and small deals, are you seeing engagement to date from your US customers that are landing potentially smaller, quote in the $500,000 kind of range? Are you seeing engagement to date that suggests a path towards your classic kind of $3 to $5 million opportunity?
Great. So I think on the first question, one, we're obviously seeing, our largest customers are growing. If you look at the top 20 customers we have, we're seeing growth there. As you see, the average customer size is decreasing, and that's in part because of the volume of customers that we're bringing on to the customers into our space. And so I think we're seeing both growth in large customers and a broader set of customers, but at the same time, I think in Q4, we saw a number of those smaller customers come on, convert into larger deals within the quarter, particularly in the commercial space. And we're seeing these customers convert to longer term enterprise deals. And we're seeing the momentum there. I also think at the same time, we're seeing a lot of, the ability to sell across a broader set of customers in a smaller price range in a way that we can get started at a smaller price point, but then grow from there as well.
Pay as you go. They got to keep doing
53% of our business are large deals, and that almost $50 million. So that some people love that, some people don't. I like it because it means we're a little more recession proof. So then you have a tale of two stories, tale of two cities. The average revenue size went from 6.5 to just over $5 million. So it's decreasing. It's decreasing for exactly the reason Ryan says. It's decreasing because we're doing well in the U.S. Most U.S. commercial customers don't buy $50 million contracts. They buy $2-3 million contracts. I think we're going to see a lot more of that. What I see on the ground are a lot of people wanting to use our software. We believe in our software, so we're open to a lower price point. We are more expensive than what I would call for some other products, but that we also think it's more valuable. So I think what you're going to see is kind of a tale of two cities at Palantir, large contracts getting larger, and many, many more small contracts, especially in the U.S.
Thank you, Alex and Ryan. Alex, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
I value individual investors quite a bit. We do at Palantir. All of us at Palantir are individual investors. We listen to you. We are very proud that we're GAAP profitable in Q4 last year. We plan to be GAAP profitable this year. That's in part because we listened to you. It's in great part because we listened to our partners and customers on the front line and at institutions that rely on us for their livelihood and for their life, that they need a company, they need Palantir to be as strong as possible. That's why we went into the black, why we're planning to stay in the black on a yearly basis, and why we have $2.6 billion in the bank and no debt. And it's going to be tough weather out there. I believe the macroeconomic environment, the political environment is going to be rough and often terrible. That gives Palantir a crucial role, and we really, really respect your support.
Thank you. That concludes Q&A for today's call.
Okay, there we go.
Who invited Steven, man? Look
I
at him.
invited Steven. I love me some Steven. You don't like some
I invited
Steven?
myself. How about that, Chris?
All right, hold on. So we got 1,700 people in here. Thank you guys so much for being here. We just live streamed the earnings call. We're going to be on here. I'm saying for at least maybe another 45 minutes, an hour. We'll see where the conversation goes. We've got a lot to talk about. We're here. The party's still going. So if you have questions, put them in the chat. We can stay on for a decent amount of time and talk it, discuss all the numbers, get Steven's perspective. Steven is a big Palantir bull, has a heavy position, so I'm sure you guys would love to hear his perspective. But before we get into that, Palantir is up over 15% after hours, and whatever happens tomorrow with the CPI, whatever happens tomorrow, if CARP says the F word and the stock tanks, whatever it is, we have this day. We have this moment. We have the here and now, and because of that, we need to ring the bell.
I hate that stupid bell.
Palantir, Q4 earnings. Look, man, life is about the moments. We might tank it later in the week. In fact, I hope we do tank. I don't want to buy at $9. I would love to buy at $6, but we have today. So let's get into the numbers. Chris, you heard the earnings. Any raw thoughts after earnings before we get into Steven?
Yeah, I mean, they did well. They're actually making all the right moves from a business perspective that they need to in order to grow a nice, long, sustainable business. One of the things that we've always said, especially on our podcast, is they need to push down market. They need to stop focusing on just big clients and that's it, and not do outreach. The fact that their outreach is grown, their marketing has been a lot better. I posted on Twitter too, like their marketing is really on another level the last 6 months. So whatever they're doing, it's actually effective. And over time, it's just going to keep growing, So I think overall the quarter was good. The only thing I would caution a lot of people, especially in the chat, is don't go too crazy. Like, don't just go, oh my God, this is it. Like, we're going to go, it's an exponential growth curve. We're going to go to $30 next month. Like, yeah, that's, if Palantir ended up going to $30, that would be a really bad sign, because that means that this is a meme stock. You don't want this company to be a meme stock. You want this company to be one of those generational opportunities where you're getting to go in at a very low point, at a low base, and then 10 years later you wake up and you're a millionaire, right? That's what you want. You don't want to be a millionaire overnight. Anyone that's looking for huge moves up overnight is not doing their homework on how this business is working. The whole thing with me right now is just going to be nice, consistent growth going forward between 20 and 30%, hopefully on the 30% side for the next 10 years. And that compounds. That compounding effect is what you're looking for in a business that you want to invest in, right? You don't want to invest in a company has 1 year where they grow triple digits and then another year where they grow, single digits. Like you don't want that. You want nice, consistent growth. And that's why I would say the best way to approach this company, it would be the same thing that I said a long time ago, which is dollar cost average. But if it does get too expensive in a short period of time, consider also, just holding off on buying more and wait until the price comes down a little bit.
All right. So Chris, are you buying?
Yeah, I'm just going to keep DCAing now. My wife is happy because she's the only one that has Palantir in her portfolio.
But no. My question is more fundamental than, I didn't just mean, are you buying the stock? Like, are you buying it? I mean, are you feeling comfortable with the narrative if things changed a little bit after this call, or do you feel like you want to be a real shareholder?
Yeah, of course. I think this was the turning point that we needed, because now there were 2 to 3 things that were confirmed for me that really helped. Number one is, can they grow profitably, right? If you have a company that's just growing but has never been able to show any profit, that's not good. You eventually need to show that you have some level of profitability. So right now, that was one thing. So they can grow profitably. Number 2, can they scale? The number of companies that they were able to add definitely means they're able to scale, right? You can't just add that many customers quarter over quarter and year over year and not say, and not be able to justify that. So the scaling issue is something that's secondary now. The only thing is, and this is the one thing that's probably going to haunt them for the short term, is valuation is still high relative to their net income, but That's something that someone kept bringing up on the chat. When you look at companies like this and they're like, oh, the PE is 1,500. Well, yeah, if you look at Amazon, Amazon was like what, 2,000 at one point in 2013, right? So just because they're generating a little bit of profit, don't just go based on traditional metrics of PE. Look at their operating cash flow, right? To see like how are they operating, how much operating cash flow they're generating on a year-over-year business, and and go from there. And I like I said, I think they have a long, consistent growth ahead of them, which is what I want to see, and I think it'll happen. I just don't think that people need to go crazy and be like, "Oh my God, we're going to $30 tomorrow." If it goes to $30 tomorrow, I'll be the first one to sell puts on the thing.
I agree. Let me before I get Steven's take on this. Steven, I think this is a kind of something you would like to see. So All Things Jay tweeted. He's part of the Palantir community. They lowered Q4 expectations in Q3. They barely met it. They lowered 2023 rev by 10%. No longer on track for 30% CAGR, but positive EPS. Positive EPS was a simple flip of the switch. Appreciate the 20% growth, but this is a bad year. I hold 5,000 shares. I don't say this lightly. I will have to sit to reevaluate my position. Now, I think Jay is a little bit too bearish for no reason, to be honest, because getting to GAAP profitability this quarter makes a lot of sense. No longer on track for 30% CAGR. I mean, you don't know if that's the case, right? This is something you have to see play out. So I think this is a little bit too bearish. I think Chris's bearish take just now, just like not going all in, is the correct take versus being upset with this quarter. What is your take, Steven? Do you agree with this tweet up here that this was a kind of bad quarter, or do you think that the quarter was all right and hopefully it's just going to keep going up from there?
In full disclosure, the earnings came out when I was in the car. So I listened to the earnings call while driving and sped through all the numbers while we were waiting for the call to finish. So this is completely raw. I really haven't digested them. I think the tweet that you showed, it's an opinion, and it's his opinion, and he's a shareholder, and he has every right to that opinion. If he felt that way, can't change his mind. There's a lot of things on the call that I liked that they discussed. Flipping through the presentation, there's a lot of numbers I like. Some numbers I don't like. Adjusted free cash flow going down tremendously. Don't like that. I need to really go through these with a fine-tooth comb.
Yeah,
I do like.
But I mean, your raw thoughts, right? Take off the condom, right? Like, what were your raw thoughts?
Thoughts were, I'm no longer neutral, and I have no reason to get rid of the stock in the next 6 months now.
Why? Why are you no longer neutral? Why are you shifting more towards?
Because it seems like Karp has really changed his demeanor. They've controlled his outbursts, and they are growing. They are doing a much better job, as Chris indicated, with their marketing. They're doing I don't know if it's a much better job, but they're still doing a very good job at converting customers, getting more deals. And the fact that this quarter was net income, not adjusted, but actual net income positive, and there's a clear roadmap for continuous growth through 2025, I believe at a 30% rate. I got to run the numbers, but I'm liking what I'm seeing, 90% of it.
Okay, makes sense. Chris?
The thing with IBM is huge.
IBM, go ahead. You can talk on that.
Well, we all knew that they had to deal with IBM a year and a half ago or a year ago when they first did it. But the expansion on that deal, I believe, is going to be very big. IBM has a sales team of over 2,000 people. They have been on the forefront of AI, whether people want to agree with that or not. They have been. And that could just be an indication of what's to come with embedding into Google and Microsoft as well, because they have partnerships with them and they have partnerships with Amazon. So those are things that I'm expecting to bear fruit in the next 3 to 5 years, not overnight. But from a long-term perspective, it's really good news.
Yeah, I don't necessarily agree with Steven on the last point. I don't think being in partnerships with Amazon, Google, Microsoft, all that stuff doesn't mean jack squat. All it just means is that they're able to provide cloud services on there. Like, so basically, if you're a customer who has Google already or Amazon already, Palantir will still be able to work with you. I don't think this is necessarily the, oh my God, like they have a like partnership with Google, so this is going to be the thing. No, all that stuff doesn't matter. I think what's What's important is that they can do on-prem, they can do Oracle, they can do IBM, they can do Red Hat, hybrid cloud, they can do all the other clouds. So their ability to be everywhere is really good, but it doesn't necessarily mean as much as some people are thinking. I think more importantly, their research in AI and everything else will probably, and I have to really dig down further into this, are they going to license it to somebody? Because a lot of the research that they've done, they've got all these patents. One of the things that you remember the Japanese guy Rachibaku on Twitter before he's one of the things that, if you guys notice, dude was just pumping out patents after patents after patents. Like he was like just showing them off. Now the thing is, if you're going to be in an AI arms race, what are you going to need? You're going to need patents. So I wonder where that licensing comes in, where Palantir is actually being able to say to these third parties to say, hey, you're gonna have to pay us in order to use this specific product because we own the patent to it.
So Chris, let me ask you and Steve a question both on this AI thing. So Palantir in his Karp in his shareholder letter says, our collective focus on AI, including the natural language and processing capabilities, have been recently made more widely available to the public. The transformative potential of software, which we have been building for 2 decades, is in its earliest stage. The demand from customers for our platforms in recent months gained additional momentum. And on the call, he said the consumer internet use cases of ChatGPT is really irrelevant compared to the operational use case of AI in the battlefield. And I think he's saying that from a financial perspective in terms of which one's going to make more money, but also from a like purpose perspective, what's going to matter more in our world. Do you agree with that? Do you think that the operational use case of AI will be a lot more important than the consumer internet facing use case of it?
Oh, you're telling me? Yeah, I think so. Yeah, I think so. I think businesses now are all scrambling probably because of ChatGPT to figure out how they're going to include AI in the way they operate, right? It's just, like I said, now it's like a giant arms race. This is what happens with any industry. When cloud first came out, everyone said, oh, that's a nice gimmick. But then people realize that, hey, if you're on the cloud, there's all these tangible benefits that you get from being 100% on the cloud. So then everyone started to get on the cloud. So now I think there might be an AI arms race where, even though technically the face of it is ChatGPT, which is just a LLM, the business itself is going to, and I'm pretty sure this is happening, the CEOs are probably calling each other and calling their teams and saying, what are we doing to use AI to make our business better? Because that's what the CEOs do. They have to become more efficient, right?
Because if your competitor is using it, you've got to be using it, right?
Exactly. So now you have this whole thing with scaling, and whoever's the purveyor of AI in being able to organize your business and seeing tangible value from it, you'll probably invite them in and saying, what can you do for us? Right. So I think a lot more people are going to be open to developing and actually utilizing AI in their organizations, which Palantir could capitalize on.
Stephen, any thoughts on AI or in general the operational use case that Palantir can use with it?
I think it's very early, and it's a story that's going to take years to unfold. And look, they're both going to generate tremendous amounts of revenue operationally and probably on a consumer base. I mean, think about it. ChatGPT, if they do a $10 a month plan for unlimited access and really monetize it, you got to think a lot of people are going to sign up for it, regardless if they really have a use for it or not. Operationally, it'll be built into pretty much every platform in the next couple of years, and it's going to be which companies can implement it the best. And Palantir's been on the forefront of it, so you got to think that this is going to be big for them in some capacity. But these are questions that can't be answered today.
Okay. Question on revenue growth. So 24% year over year, 1.91 billion, not 30% year over year growth, although US revenue was above 30% CAGR and US commercial revenue was 60% year over year growth. I mean, do you think we get to this 30% CAGR 2025? Do you think they're sandbagging? Because with their expectations of 2.2 billion, it's only 20% year over year growth. If they sandbagged profitability, do you think they're sandbagging revenue?
It's a possibility, considering that I don't necessarily think that they had taken into consideration that AI would go more mainstream. But now that it is, I think it's a much more achievable goal. I think they're going to be able to actually get into more doors. So imagine right now, 2 years ago, trying to say that, hey, we're going to be 30% year over year, that was a pie in the sky dream considering that you were slowing down. But now I think, like I said, it's an arms race. So now just the scenario for them to grow 30% year over year is actually real. And I think it's doable. I don't necessarily think that it's a 100% guaranteed to happen, but it's a lot more doable, and it's a lot easier to go into these doors right now to all these companies and saying, what are you doing for AI? We're Palantir. We sell AI to Ukraine to fight off the Russians. We can sell you AI products so that you can beat your competitors.
Yeah, two things on that. What Chris said is really good analogy, because Palantir, they can come out and say we're the gold standard. All the governments trust us. And if you're trusting us on the battlefield, you can trust us in the boardroom. It's a powerful statement that nobody else can really say. And from a revenue standpoint, yeah, the 23% wasn't the 30, and a little bit of a miss there. But you look at deals closed, 61% year over year growth. You have 976 deals closed now from 605 in the past year. And then I'm looking at just in Q4, 55 deals were closed, 11 of which were at least 5 million. When you think about cloud, companies still have not completely done their transformation into cloud. And AWS, Azure, and Google is a distant number 3 with Google Cloud, has seen immense growth over the past decade. I think that, my opinion, AI is going to be similar, because this is the next frontier of software platforms. And we are not even in the beginning, we're in the infant stages of it. There is a long line of growth in this. How it plays out could be similar to cloud, maybe not to the monetary dollar amount because of everything that goes with hosting, but at least from a business viability standpoint, it's going to have serious ramifications. Companies are going to have to retool, and this is a big opportunity for Palantir.
Yeah, I would tend to agree. Chris, go ahead if you're going to say something. No?
Yeah, no, I lost my train of thought. Like literally, I was watching.
Okay, so then I'll transition here to the GAAP net income profitability. On the call, Karp said, look, we are trying to be very fiscally responsible. The CFO also said we really care about GAAP profitability. One of the things I think maybe you two don't know about yet is they got to GAAP profitability because of selling out of some of the SPACs and because of $14 million they gained in interest on their cash reserves. That's what pushed them over the GAAP profitability EPS. But their actual revenue from operations is not yet GAAP profitable. So they maneuvered financially a way to become GAAP profitable on an EPS basis, and they are kind of guaranteeing us that we'll figure out the revenue side of it and the margin side of it to actually truly become profitable in 2023. How did you guys feel focus on this?
And that's why I like free cash flow as a better metric of profitability, because you can manipulate net income a lot easier than free cash flow.
I agree, but at the end of the day, the street wants to see positive net income, right? So it's like
I honestly could care less how they generate that net income as long as they're able to generate it. Every single company right now is the same position. Google has $100 billion in cash right now. $5 billion a year is probably just going to be interest that they're going to be collecting, which is good. It doesn't
dollar
matter.
Net income is dollar net income. Doesn't matter where
exactly.
It's from.
Exactly. So I think right now their cash hoard is good. What's good is they're not burning through the cash hoard to try to make investments in order to grow revenue. That's the key right there. Where imagine right now, like the whole SPAC debacle, imagine right now you have to constantly keep writing off losses on SPACs. You know, that literally was one of the things that held them back significantly last year, and that's not holding them back now. So hopefully that whole episode has been put to rest. I do, however, think that Sham may have been pushed a little bit to the side and saying, look, you focus on product. Don't worry about the business. Because I think the SPACs were Sham's idea, but I can't 100% guarantee it, right? Because if you look at Ginkgo, and he's a board member on Ginkgo, they do the same shit over there where it's like, oh, we'll invest in a company that's going to develop a product that we do research on, and then they'll pay us to do it. But it's like, you're paying them to pay you? Like, So like I said, even right now, Sham not being on this call,
that was
I don't
interesting.
know.
What did they say? They was like he's in the dungeon somewhere. So they said he's doing some other stuff or something.
Yeah.
Yeah, that was interesting. Stephen, what were your thoughts on this gap profitability stuff?
Look, it's good. No matter how you look at it, it is good. It is positive. Hopefully they continue to generate it. I'm still stuck on their adjusted free cash flow and their cash flow from operating activities. I'm still looking at these numbers and I'm not liking the year-over-year decline in it, even though we are net income positive, and that's what the street wants to see. Revenues increasing, you would like to see cash from operations going the opposite way, not declining. So I'm hoping fiscal year 2023 proves that 22 is an anomaly.
Why? Okay, so can we talk about I want to ask two questions. A, how important is it that they have no debt and they're still being able to grow? But B, why are their adjusted margins decreasing?
Well, no debt and being able to grow is incredibly important because you're not tapping the debt market to grow. You're growing truly organically, which is phenomenal because you don't have a leveraged balance sheet. You have companies out there that grow through leverage and you have a 5x adjusted EBITDA to market cap ratio and you're tremendously leveraged. Palantir is not leveraged, so that's phenomenal. You don't have to spend capital to service the debt. So huge. What was the other one?
Why are the adjusted margins decreasing? So
I don't know. I haven't gone through
because gross margins are still 82%. So I would imagine sales and marketing is
but gross is gross. I mean,
that's my point. So sales and marketing has to be cutting into the adjusted.
Yeah, because the gross is just cost of revenue being deducted. You got to look at all the other expenses, which I haven't done yet. But look, in 21, you had a 28% adjusted free cash flow margin. Now we have 11%. I mean, we generated 424 million in adjusted free cash flow in 21 on what was it, 1.6 billion in revenue?
1.5. That would have been profit.
But that's probably I have to look at it further, but that's probably because they're spending more on SG&A, right? And that's what you need. You need to get your name out there.
Yes.
Like as much
Chris,
as
I agree with that, but explain how their cash flow, take free cash flow out of it because of what you just said. But the fact that their operations are not throwing off as much cash from operations as it did last year, and they generated an extra 400 million in revenue, that's concerning. And I don't have that answer because I just got home. And I need to look
because they're pushing down market. That's obvious. If they're pushing down market, they're going for clients that are not as, like in terms of like operational profit, not as high as they normally would have had, right? When you push down market, you're not going to generate that much revenue up front. But over time, just like they said, it's going to eventually compound itself and you're going to have those revenues grow. Initial pilots, especially if you saw how, like, look at the slide where it said they grew, look at the total number of customer clients they grew that have $1 million plus of spend with them, right? Versus 5 million or 10 million that they had right there, right? 55 deals at $1 million. That is a significantly big cohort of clients. If they're able to convert those 55 deals into, let's say, 2 million next year, and then 5 years later, 10 million, those are huge things. One of the things I don't like that they're not doing right now, and maybe I don't know why, but they used to break down like on what level of cohorting that they used to generate more revenue. So if you remember, if you generated based on a 2018 cohort, how much did those cohorts be in 2020? And then now if you look at the cohort that joined in 2022, by 2025, those are going to be maybe $5 million to $10 million, per year contracts if it's successful. So that's the question. How much of these smaller customers are they going to be able to convert to higher dollar, higher value, revenues in the future? And I think it's possible. One of the things that I've been stressing like crazy over the last year, and I know everyone gave me so much shit about it, was they need to push down market, get into as many doors as possible, screw the amount of money that you're going to get up front and be like, oh my God, we have so much operational cash flow. F that nonsense, get in the door and then figure out how to upsell them later on. Don't try to upsell them now. If you go in there with a sticker shock, hey, it's going to cost you $5 million. Most companies are going to say, hey, that's the door. See you later. We don't need you. You come in with a price point that's much more easily swallowable, especially during a recession. guess what? If your product is that useful, they won't mind spending 5 million later down the road, maybe even 10 million down the road. But you need to make sure that you're pushing in with a price point that's attractive enough for you to scale in. And that's what they're doing right now. So yes, they're taking some hits operationally, but like I said, as long as their customer count keeps growing, that's what we want to see. We want to see customer count keep growing and hopefully accelerating and get to the levels that we see with Snowflake and see with the other major SaaS players out there.
Let's look at this comment in the chat. Amit, if it's the big institutions like options that move stocks, what's going to happen in the minds of big money now that Palantir is GAAP profitable and SBC looks to be under control? So let me say two things on this. SBC is under control, but it's not declining every single quarter. It was actually slightly up this quarter. It was insignificantly up, but it needs to really get a lot down, even a little bit more. So I'm looking for that in Q1 2023. Let's see how much more further down it can get. But from 840 to 120, that's a pretty steep decline over the past 2 years. In terms of GAAP profitable, again, they've got to have a quarter where they like actually get net income, where there's real money, right? So like we still have to see that, even though we're GAAP profitable on an EPS basis. But if big monies want GAAP profitability and SBC to be down, they also want to see some decent growth, 25 to 30%. Maybe institutions will be a lot more friendlier to the stock.
Well,
I think overall,
selling off.
Yeah,
it was up 21% before. It's only up. I say only, but it's up 15% now. So who knows?
It might be down even more with CPI tomorrow.
Yeah, who knows?
I think a lot more companies, especially funds, are going to be open to buying Palantir now that they are GAAP profitable and their net income positive. There's a lot of ETFs, there's a lot of mutual funds, a lot of hedge funds. They do not touch your product or your company if you're not net income positive. That's like a guaranteed, we're not even going to look at you kind of scenario. Guess what? Now there's going to be probably a slow trickle of hedge funds, PE funds, everyone saying, hey, wait a second, they're generating cash. They're generating their net income positive. How long have they been net income positive? Let's take a look. Let's deep dive into who they are and see if we can open a small position that we can add to in the future. This is a classic example of Salesforce. They have the same trajectory that Salesforce had. So in 10 years from now, when you look back, you'll be like, wow, they consistently grew the last 10 years at 25 to 30% year over year. And that's what you want to see.
This is not an overnight investment. This is not a short-term investment. This is exactly what Chris said. This is a 5 or 10-year investment. And Palantir needs a very strong 2023 to finish 2023 net income positive and to continue and hit that 30% growth mark. And I think you're going to see a lot of analysts come around. I think you're going to see a lot of funds start coming around. This quarter is great. It's a pivotal point. Chris said that before. We just need this to compound and continue happening through 2023. You look at the deal that they kept talking about with BP, 9-figure deal on the twin turbine. That's huge, especially since we know Exxon's a customer, especially since Kinder Morgan's a customer. And some of these other numbers that are in the presentation, and Chris, I don't like that Karp did not put the cohort slide in the letter. He usually puts it in his shareholder letter. I don't know why he didn't. It's one of the most important slides that they put in every year. But what they were talking about, the U.S. military and the Army, there's a lot of good things to hope for this year. And if they can keep these numbers of growth up with commercial and government, and if international isn't as slow as it was in 2022, they really could be sandbagging by a great deal in 2023. But
that's what I'm thinking.
We won't know that till the summer, though. You're going to need at least 6 months of data to even see if they're sandbagging.
The other thing is in a bad macro, 2022, they were able to grow pretty decently, get to GAAP profitability. I don't think 2023 is a bad macro yet. I mean, we still need a couple more months of data, but I mean, so far, this whole collapse S&P to 3,200, that just hasn't happened, right?
Yeah, but a bad macro is good for Palantir because companies are looking to do more with less. And if they need to implement different softwares to achieve that goal, that's what they're going to do. So
absolutely,
bad macro really doesn't mean much for Palantir.
Yeah, I agree. Yeah, because they've been able to perform in a bad macro, and in a good macro, it might be even better for them. Or it might be a bad macro might be better for them as well, because companies need to save costs. Let's pull up a comment by CodeStrap. Hey guys, the most interesting part for me was Carp pointing out the importance of AI in modern warfare and how far ahead they are in this context. Not sure the market has figured this out. Chris, you spoke about this a little bit. You want to just give another couple sentences on how far you think Palantir really is in the modern warfare context?
Yeah, I mean, they've been working with the military forever, so they understand all the challenges that the warfighter on the ground, the operations officer on, sitting in all parts of the world, they understand what the core problems are, and they develop products around it. It's just the adoption curve in the military is it's difficult, right? You have a lot of incumbent players that always sell shit to the government all the time. And they're always going to try to sell stuff. So there's a lot of incumbent players. Palantir kicked the door open, they had doors slammed in their face, and they had to go and sue the government, and they kicked open the door, and now they're through the door and they're selling these products out there to the government side. And I think the Ukraine thing was definitely a big boost to them, because it's really hard to tell people you have the next greatest thing without demoing it, especially if the client is not willing to give you the opportunity to demo it. Well, guess what? Now you have an active war where you're able to show off the capabilities that you've been promising. So I think, and not only that, but you're proving effectiveness on the battlefield, which is very hard to do, right? So I think this is one of those things that is also going to carry Palantir forward. And I do, however, think that they would do much better if they separated the government and commercial sides up. I don't think I'll ever get to the point where I'll believe that both of those sides can work congruently together without having a lot of
friction.
Well, I wouldn't call it friction. I would just say cross bleeding of different things, like mission creep. That's what it's called. So I think if they were two separate companies, they could focus really heavily on one specific thing that they want to do and target.
Yeah.
And the other side can focus on nothing but commercial and do that. I mean, it's fine the way that they have it right now. It's just in terms of even like displaying, like, how do you value this company, right? Do you value it like a military contractor, or do you value it like a high growth SaaS company?
And that's the beauty of this, because what if it's both? I mean, how do you put the multiples on it? I think it's such an interesting question. I also, my response to CodeStrap's kind of question about operational AI with Palantir is, I have truly never really cared about defense and defense contractors and the military and stuff like that. I never joined the military. I don't have a military background like Chris. So for me, it was one of those things, like many, many Americans, that takes your freedoms for granted. And quite literally becoming a Palantir investor has showed me, oh shit, this is not a joke. Like if you don't have protection, another country will invade your ass, and they will cause millions of deaths. Like this is a real thing. And I think a lot of us, we forget about the fact that the United States is one of the most freest countries in the world because we have this type of protection. So when you think about Palantir actually having this relationship, as you mentioned, Chris, with the US Gov, actually implementing their products to protect soldiers on the front line, and now you've got this revolution of AI that, yes, can give you answers really quickly on a little query, but can also be the actual difference between life or death at hyperscale, because we know China's and Russia's working on their own AI stuff. That matters. Now, what's the valuation on that? We don't know, but that matters.
How much you want to bet Palantir is the one that they probably used Palantir to spot that balloon and all the other balloons coming across, where they didn't necessarily do a lot more spotting before. Now, all of a sudden, their AI models are like tracking all of the U.S. airspace right now for any balloons that are coming or going or whatever. And I bet
thought Mark was going to mention the balloons a little bit, but he didn't.
He did. He said the balloons. He's like, oh, whether it's this, I'm telling you, it's the Meta constellation probably picked up the balloon. They monitored it, saying, oh, you know what, here it goes. And now they'll probably double down. I mean, that one of the contracts that Palantir has is for debris tracking with the Air Force and with the Space Force. So you can see that, Palantir is slowly embedding themselves into like the defense industry. What's good about the defense industry is that you get nice, consistent, long-tailed revenue. And once you're in it, you'll never go bankrupt. Like it's just, you won't, because the government's just throwing cash at you. The question
Steve, any thoughts on this, Steve?
Yeah.
Look, you guys know that I've been a very big proponent of Palantir being more embedded with the military, especially with the Jedi contract. Most of the parts of it still up for grabs, I believe.
Yeah.
And their deal with Lockheed Martin is going to be huge. And like Chris said, military industrial complex is a $800 billion a year organization. There's a lot of money for software there, especially software that works and software that other people can't build.
Yeah. Yeah, I agree. It's exciting. It's definitely exciting. Go ahead, Chris.
No, it's just a lot to stuff to digest. I'm probably going to take a second look at the earnings report, probably do a quick deep dive into their final report whenever they release it. And yeah, and like I said, I think this is a turning point. And I think, what's his name? I think, was it Kevin Kawasaki that said it? Like their CFO. This is a turning point. And I truly believe it, because now GAAP profitability is no longer a target. It's a reality. And now it's just, let's build on top of it. You know, that also means that they're going to be operationally very, what's the word? Like,
They don't want to
they're
go
going
backwards.
Yeah, they don't want to go backwards. The last thing you want now is to go back and be like, oh yeah, you know what? Last quarter we got profitable. Next quarter we're not. Like they. I mean, if that happens, it's bad. So they're probably going to make sure that wherever they're expensing their dollars, they're not expensing them just freely. You know, they're not going to spend money like drunken sailors, like some of the other SaaS companies did. You know, like over the last like 5 years, where they was just like, oh yeah, we've got cash, let's throw it on this project, let's throw it on this one. I think at this point, Palantir has got to the point where now it's just, let's build on top of what we're doing and let's do it nice, consistent, long tail growth going forward.
What'll be interesting to see is the talking heads on CNBC and see if they do an about face or not.
They will. They all do about faces after earnings. Oh, I told you so. Except literally, you can pull up a clip where they were like shitting on them like literally a week ago. So, yeah, I think CNBC and all these other companies, all these funds are probably going to be taking a second look at Palantir now.
Chris, I did not know that Cisco was a partner of Palantir. Did you know that?
I don't know that.
I mean, they were, maybe they're not. It says, thank you to our FoundryCon US 2023 speakers. Recognize pretty much everybody else. Cisco's up here. That makes me interested about cybersecurity.
Not sure.
There's a lot to digest. I'm planning on doing an article on Thursday to come out Friday. I never like doing it directly after earnings because I like to read everything through a couple of times. But this earnings report in this quarter is definitely puts me in a much more bullish mood for the long term than I was. And we need them to sustain net income and continue to grow. And I think really good things are going to happen to people who have a long time horizon. Because Chris said it, I've said this in the past, this could be a resemblance of what Salesforce did over the past decade. Really,
it is. Just FYI, it really still is valued pretty richly. Okay, it's I think almost a $16 billion market cap right now, or even more. I don't know. I have to double check. One of the real problems is that dilution really does kick in and kick you in the pants, because I got to see what the market cap is now with this $9 per share position. So don't like I said, don't expect this to be a $30 stock overnight. If that happens, that's really bad. That means that you should probably sell, because something that's a little overvalued just became really, really overvalued, in which case you should probably sell.
Quote is $17.5 billion company right now, because they were at 15.5 when the market closed.
Yeah, I agree. And obviously we would want it to get to 30 over time, not just immediately. Last quote from CodeStrap: is there a more advanced application of AI that affects the real world outside of Palantir, from AI targeting to energy production? And I think, there probably isn't, but that's the exciting thing about Palantir, as we've talked about for almost 2 years now, which is they could be everywhere, from targeting to energy production to healthcare. That Cardinal partnership was amazing, and the downstream effects of that we're probably going to see all these network effects adding up. That is the super, super bull case of what Palantir could be, which theoretically could be way more important than what Salesforce has done for the world. And as a result of that, have more financial implications. But the go-to-market has to be there. They have to be able to grow. They have to maintain margins. They have to maintain GAAP profitability. So there's a long road ahead, but that's the exciting thing. I just don't see any other company in the market you want to bet on to be able to expand the way that Palantir can across every vertical other than Palantir.
There's also one last thing, and then I'll probably head out. if you noticed, because of Palantir's support for Ukraine and also all the other stuff that's a lot more left-wing stuff, and even like Karp being in Davos, it kind of shows that now they're like, you know what? Even though these guys are assholes, we're gonna be part, we're going to change up the momentum where we're not just saying like we're gonna support one side. So I think in terms of media presence, they've started to become a lot more neutral. And I think a lot of the left-wing attacks that literally have been lobbed against them for like the last, I don't know, however many years since the Trump thing came out, I think those voices are starting to die down a little bit. I don't know if you guys have noticed it, but I have.
Yeah, I have. I mean, when you're helping Ukraine stop big bad Russia, the leftists are going to like you more.
Yeah, especially right now, because guess what? Biden's working with these guys to do it. Like, if you think that Biden and these guys didn't authorize Palantir to just go and work with them, nah, progressives, when it comes to Ukraine situation, they're all war hawks. They're like, nah, like, we got to do everything we can. It's kind of funny to see the right, which typically is more like in support of military action. They're kind of like, hey, maybe we need to do peace with Russia, where the left is like, Russia till death. We need to kill Russia.
Steven's not going to say anything on that because he never gets political. So go ahead, Steven.
I refuse to get political.
All right, your last thoughts on earnings without the condom. Raw. Give it to me, Steve.
I am going to put something together on Thursday that's going to be a very deep dive. I see stuff coming out now. I think earnings were very good on the surface. Few minuscule things that I did not like, but I can get over. Just about everything's going in the right direction. There's a lot of momentum to build on. I think they're sandbagging. And if you listen to what they said on the call, that this is only the beginning, the amount of verticals that Palantir is in, the partnerships that they've done in 2022, Dom has talked about this, I've talked about it, Chris has talked about it, sets them up for a flywheel of growth in several different industries over the next couple of years. And honestly, this is not about what Palantir does in 2023 from a stock price. This is about how they execute, what they can grow into in the next couple of years, and can they achieve $4 billion in 2025? I think they can at this point. I was questioning it, but just doing some quick numbers in my head, yeah, I think they can. This could be a very interesting story going forward. Very interesting.
God damn it. This also means we're probably going to have to do Palantir weekly for the next 5 years, man.
We might have to do it on Thursday because this Friday I'm going to be in Boston. So I'm not sure if I can do it Friday. So Thursday night, if you guys are free, we might do it. But yeah, that's it for us. Please follow us on Twitter. 1,000 people that are here would mean the world. I put my link, Dividend Streams. You'll get his Seeking Alpha stuff, his articles there. And we got Chris in the chat. Before you guys leave, please make sure to give us a follow on Twitter. It would mean the absolute world to us. Big Palantir community on Twitter. All 3 links in the description. Kelly went and promoted herself as well. So go ahead and follow Twitter.
Hold on one second. Let me just
and then one thing while Chris is pulling this up, remember, you don't have a Twitter account, you need to make a Twitter account because Elon Musk has a couple $2 billion worth of debt payments coming up on his Twitter acquisition, so he needs your help. Palantir has no debt interest payments because we don't have any fucking debt. So if you want to help out our boy
monetization,
Elon,
come on,
and
bro.
follow us. No, it's okay. Jeremy got me with the $50 super chat. We don't need monetization. We're
good. Dude, curse in Hindi or something. So this was my last message about Palantir, like consistently. This is what I said. Palantir marketing working overtime lately. Good job, guys. Keep it up. I was like leery and suspicious what the hell was going on because these guys were super excited going into earnings.
All the interviews too with Karp, right? Like he's been really, he's been out there.
Yep. So overall, oh, by the way, someone said, do you think Kathy Wood buys back in? No, I don't think so. Not unless Jesus comes down.
Kathy Wood sold Palantir at $12. It was a good sell, but she bought TV advertising from Roku over Palantir. I mean, come on, man. That's and they also said government wasn't going to grow anymore, right? They said Data Walk was going to take over. I mean, I don't know.
Good luck. Good luck.
Good luck on that.
All right,
Hey man,
guys.
this is a great day to be a Palantir shareholder investor. I don't know if it's going to live up to this on the stock price. We'll see. But the cool thing about being part of a company is that you get to enjoy in some of the upside, even if it's just for a little bit. And hopefully on the long term, it compounds. And there's a really tremendous ROI on this investment and the journey of covering it and making friends like Chris and Steve and this whole community. That's the real
Long-term
fun part.
mindset. This is not a short-term investment unless you're a trader.
Agreed. This is not a short-term investment. Okay. I was going to make a joke about short-term and we were talking about condoms and Rob, but I'm not going to make the joke because that joke,
Dude, you really are trying to get like us demonetized.
Yo, YouTube
Stop.
can't monetize for saying the word condom, bro. That's ridiculous. Like that's
Bro,
insane.
they could
You cannot do
demonetize
this.
for saying anything, all right?
You cannot do this. This is insane. All right.
We gotta
Thank you
keep
guys.
this-
I appreciate you all.
Yeah.
We'll see you on Palantir Weekly probably Thursday night. Good night, everybody.